The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. Tommy O'Brien. My dad, Tom, is away one more day, and he will be back tomorrow morning. We got a great lineup for you today. And, of course, we are joined by our man, Basil Chapman, again. Basil, good morning.
Hi, Tommy. How are you?
I'm doing fantastic. How are you on this Wednesday?
Good, thank you.
Good. So let's just jump right into it. We have the Dow down 18, S&P is flat, Nasdaq's up 14, crude oil's down 68 cents, gold's down $6 at $12.09, silver is down 17 cents. And let's jump over, as we do, start off every show with our man Kevin Hinks from TD Ameritrade Thinkorswim. If you haven't checked it out, folks, swim lessons every day, 12 o'clock right here. Kevin Hinks, Scott Connor do a great program on options. Kevin Hinks, good morning.
Good morning, Tommy. Good morning, Basil.
Good morning.
How we doing?
We're doing good. We're
we got a little news with the ADP number today, right? Coming out, 298,000 jobs versus about like 190 they were looking for in an estimate.
They were looking for, it looks like our consensus here was about 183.
Okay.
Came in 298,000. So, once you get to Wednesday, Tommy, all the attention starts moving towards Friday and the payroll number. Right. The unemployment and the payroll number. So, as a kind of a precursor to this, that's a pretty big number we have there.
Yeah.
So, and it's kind of interesting. Very muted response in the E-minis to that number.
And we got a little bit of a boost, but right now we're pulling back for sure too. On top of that.
Yeah, E-minis up 1 3/4, Dow actually down 20. So pretty interesting. And oil very soft, but the 10-year yield is really what's moving this morning.
Yes.
10-year yield almost touched 2.6 this morning.
Yeah.
So it looks like the Fed percentages of the probabilities of a Fed hike are moving into the 90s here. This is a pretty big number, but that number, it's really hard to exaggerate on what that number is. 298,000. That's a solid number.
Yeah, and of course it's the first month under the new president, right? So I'm sure that's going to get talked about, and and we'll see where the number comes in Friday. But that's a big beat, man. Big beat for sure.
And then, once you get past Friday, it's next week, and it's the 15th, which is the Fed meeting and their announcement. So, at Swim Lessons, we've been discussing that we think the Fed's going to move in March, right? We talked about it when it was a 17% chance. So, of course, we think they're going to move now. So what we're talking about now is what is Janet Yellen going to say in her press conference guiding us,
for the future, right? How many hikes and how fast are they coming at us? Yeah.
Right, because the last 2 times she's raised rates, she's spoken a little dovishly, and bonds have actually rallied.
And in that same right, there wasn't like a hike immediately after that too, where it was signaled, to the same.
Exactly.
Yeah.
So now she's backing one up. How is she going to guide for the rest of the year, for the next 9 months?
Yeah.
So
because they've made it pretty clear, the market's made it pretty clear with those expectations, the Fed futures, that they're going up, and there'll be a shock if they don't. So it's where do we go from there, right?
Right.
So what are we talking about? Go ahead, Basil.
I just want to say all the criteria that Janet Yellen's spoken about for ages, they've met all the parameters.
And it is almost interesting, right? Because they were almost meeting it, and it felt like, and that's why you were talking about it, Kevin, in terms of that it should be coming. And then all of a sudden it just took all the Fed governors, of course, coming out and then saying they were going to. But that data, and that's what we were talking about, was there for sure.
Right.
For sure.
Exactly. And Basil's exactly right. The data's been telling us that for some time, actually. Right? They keep moving the target, though.
Right.
Once they get close to the target, they move the target a little bit.
I know. We kept saying, right, if not now, when? kept being the conversation.
The problem is the history of the Fed is very often when they do move, it's just at a point where the market itself is a little bit vulnerable.
Sure, a little too late, maybe, right? Who knows?
Sometimes, yeah.
Sometimes. So what are we talking about? What are we talking about today, Kevin, on the program?
Today's a very important topic we're going to talk about. VIX, volatility, and the rule of 16 is the title of today's show. So we're going to talk about all things having to do with implied volatility.
Oof. And if anybody's listened to the program or traded options, does volatility play into that maybe a little bit, Kevin?
Just a tad bit, right?
Yeah.
If you're going to be good at one thing when trading options, being a master at implied volatility is what I would choose.
We were looking at the VIX yesterday, Basil and I, and it's amazing. You know, Basil had pointed out maybe some lower lows, right, Basil, and maybe just some lower highs, but we're still talking about lows, no matter what we're talking about.
Right. But it has been making slightly higher lows, yes.
Right. Bottom line, the VIX is at 1140. That's the implied volatility of the S&P 500. If you're trading individual names, you have to check the implied volatility of that name that you're trading. And is that considered high or low on a scale from highest to lowest? And that decides what your strategy should be.
And what's the historical average? I've heard you talk about it for that VIX.
15.39.
15.39. That almost seems
for the VIX.
Astronomical from where we've been recently, right?
Right.
I mean, what would we be talking about if we were at 16 right now with the VIX? Wow, we'd all be in shock, and that would be the average.
Right.
Pretty amusing.
Right. It spends more time below that number, but when it rises much further than that number.
Those spikes that it has had, for sure. But not recently. We'll see what happens. Awesome. Well, 12 o'clock today, Kevin Hink, Scott Connor. Check it out, folks. They'll be talking about the VIX. Kevin, we appreciate it, man, and we will be listening this afternoon.
Great to talk to you guys. Always a pleasure.
You too. Have a great day, man.
Thank you, Kevin.
Awesome. All right, folks, come on back. We'll see where this market goes. Let's see where we're trading. We still have the markets relatively flat. We're looking at right now Dow down 24, S&P's barely negative, Nasdaq's up 14. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Basil Chapman, Tommy O'Brien. Dow was down 20 points, and the S&P's hanging around flat. Basil, I saw you checking out the gold chart as we were on the break. I was taking a look at gold as well. So what are we looking at on gold today?
I always like to review to see where we were and what we did, and within the Chapman Wave methodology, what was working, what wasn't, because that's the way you'll educate yourself, by learning from mistakes or whether it's
Sure.
right. So the principle involved in the Chapman Wave methodology, one of the core principles, is that you identify the lowest, most obvious low bar, and you merely count each successively higher peak. In this chart you can see right here, you want to get to the fourth highest peak. That's where other things can happen, but the objective is to try to get you to that fourth highest peak. So let me move this away. That's our template. And what we were looking at when we got the call, I think it was from Mike, looking for the 1220.50 area, I think, on the NASDAQ.
Yeah, unfortunately, I saw that expired, I think, about 12:16, 17, maybe yesterday. That's unfortunate, but go ahead, yeah.
Well, I just wanted to show that, look, we got that peak D at 1219.10. It pulled back, and then it ran up by 11 o'clock. It ran up to 1220.80. And that was an E, and a pullback, and had another 4 peaks to the upside, and now it's really taken a dive.
It was only, I really paid attention because it did get that thrust right at the end of our program yesterday. Remember,
Right.
we were talking about
Right.
and so I took a peek at it, and it ended the program right at his strike price, and unfortunately, that was almost the high for the afternoon.
Oh, okay, yeah. Well, I did want to go through just to show, the methodology involved.
Yeah.
When we talk about the VIX right now, the VIX you can see with slightly higher lows. In other words, each low from the one that started off on the 27th of January, that was at 10.30. The next low was higher. It was at 10.55 on the 10th of February. And you've almost got a sequence here in terms of time lapse. And then the next one was on the 3rd of March at 10.94. So simple. Take out this 10.94 low. All of a sudden, you've changed the pattern and you get an arch formation. So this is going to be very important. And my thinking right now is, as we were talking about yesterday, remember I said that in my Chapman Wave, in the technique that I developed over the last year and a half, I looked for the Chapman Wave 5. We're still in this 5. There's still leg D down, but what the objective was to take out the low of right there of 20,902. That was that was the low at 11:30 on the 7th. Well, we did that yesterday at the end of the day, and we're doing it right now. So this is the 5 going down, and you can see I spoke to you about the H pattern, the lowercase arch formation, and now this rally is so far been very weak. And my thinking is that nothing's changed. I think that we're going to kind of drift lower, slightly lower highs, slightly lower lows, at least going into the end of this week and maybe even into next week, and then we'll see. But that's kind of the scenario I've got.
Nice. And it will be interesting, like we were talking about with Kevin. We have the government payroll numbers on Friday, and then, of course, we have the Fed coming next week, which will provide some volatility. We have a caller, Basil. We have Talking Gold. We have our man Charlie from Wellesley. Charlie, good morning.
It's Tony from Wellesley.
Tony from Wellesley, of course.
Hi, Tony.
Good morning, bud.
How are you, Basil?
I'm well. How are you doing?
Real good, thanks. Real good.
So,
Now,
Tony, we were
looking at
talking gold. I know you want to take a look at Nugget. Is that right?
Yeah, I think I got a bottom in this. I'm wondering what you guys thought. I think we could maybe have a little run-up.
Basil, I would love, you were just giving some good analysis for gold. Why don't you go for it, please?
So here's the nugget. I'm just going to do this real quickly. This is the 10-minute nugget because you really need to have a shorter time frame to start your move. You can't get a turn unless the rudder turns, and this is the rudder turning.
And so we're looking at nugget, which is the direction daily gold miners bull 3 times. So
and it's trading at $7.54. It's down 26 cents. Now I think this is a little early, and there are a couple of reasons to say that. If you look at the dollar, and I really think it's important to keep that relationship, as long as the relationship is there between the dollar and gold, the inverse relationship. So let me, if you don't mind, let me go to this 10-minute chart. I might be a little behind, but at least it's giving a direction here. The dollar, if I can hit this correctly. Yeah, so what I'm thinking is, I would not be surprised if gold is getting closer to some kind of a bounce. So I should just ask you, is this a trend, or is this a real short-term trade using the nugget?
Well, with the nugget, you got to make it a short-term trade. But I also have my GDX. But, I'm hearing wonderful things about gold for the long term, from just fundamentalists. And, I have no crystal ball, but I hear numbers. And these are crazy people, 1,500 this year, and it just with all the debt problems and the
I wouldn't say Tony. I wouldn't say that's crazy. It doesn't mean it's going to be right, but that's that's a totally plausible scenario for something where we're only talking about it's the beginning of March. So this year there could be some volatility for sure.
And I heard one guy say, and I'll pass this along. He thinks there was this fund manager for gold stocks. He thought we were in the first year of a 3-year bull market run in gold stocks. So you get something like Nugget, you put a little money into it, then you have your core GDX. You can make some serious money over the next
I'd just be careful with the Nugget with that type, like you said, and I know you understand it, saying you got to be quick with it, just because it would be unfortunate, right, where you get a big move in gold, but just because the way it's oscillating, that Nugget might compound, the wrong way for you. So just watch that. Yeah.
So let's do this. To my ear, you have two. I'm not going to call them conflicting, but you've got two issues here. One is you've got a short-term trading vehicle, which is the gold 3 times long gold, pure. That's the
gold miners. Just to put,
that's the gold miners, and the other is that gold itself has been. The gold miners took the gold market up, and the gold miners brought the gold itself down. So I think if you don't mind, I'm just going to go to the GDX itself.
Perfect. Which is, of course, that's really what the Nugget's trading off, right?
And that will be the root of what you're looking at. And what I said to subscribers this morning, I think that gold is getting closer to some kind of a base where it could have a bounce. And I must emphasize at this point, based on what I'm looking at, I have to treat it as a bounce. So this level, I think I spoke about it with Tommy yesterday. I said 20.45 to the little gap of 20.30. 20.32. So it's just a little bit of a gap. I think we're heading towards that. So you might be a little early, which is the reason why I wanted to bring it up, because it's you are trading quite a volatile vehicle. But my thinking is that within the area of the 21, I'd say somewhere around here, 21.29 to 20 points. What did I say? It was 20.45. Yeah, I think that there should be some kind of stability, and that there should be some kind of a bounce. Now, if you talk, that's the one thing you see. Now, if you're talking longer term, and I'm looking at the GDX, the seriousness of this decline says to me, even if there is a basing formula going on, you're going to have to wait a little bit to actually turn the corner to be able to rally sharply.
Okay. Very good. So I appreciate your insight from the both of you guys.
Tony, we
Tom, I hope
appreciate the
your
call,
father-
man. It was awesome.
I hope your father has a safe return trip. God bless him. I go way back to the 1990s.
Tony, we got to
Wonder
run.
if
Thank
new
you, though,
financial
man. Have a
resource
great
and
morning.
diversify your financial portfolio. Consider the new Market Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Lunch and Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Basil Chapman, Tommy O'Brien, and Basil, the show flies on us every day, right? And of course, we had crude oil numbers at 10:30, but we had a nice good call with Tony, but they just came out, and let's take a quick peek. We have oil, looks like popping a little bit. We're trading.
I've got. Can I just tell you what I was going to do before you tell me what's going on?
Sure.
What
go
I was
for
going
it.
to say is based. Now I'm behind, so that's good.
Okay.
I'm a little delayed. There was an arch formation, and you know the lowercase h that I always talk about, if it successfully does not break the left side low, in this case 52.30 on the crude oil continuous contract, then there could be a rally. And this pattern says if there's a rally, it has to take out 52.53. If it does that, I have a price time match that says it could go to 52.62, and that has to be by 10:50.
Okay.
Otherwise, if it breaks that low, it's in trouble. So I was thinking I would play both sides, one for the pop-up and one for a pullback.
You know, that's
anyway,
like
it's too late.
That's, you know, it all ties in well together. A little volatility trade. They're going to be talking volatility on swim lessons at noon. Volatility is the deal.
Correct.
So we'll fast forward 15 minutes, and we have oil trading right now at 52.62. We traded.
Oh, right there.
Yeah,
okay.
we spiked up. We'll get the numbers and actually what they are exactly. Maybe they have it in the den. I'll try and get all these screens up at once. And I happen to pull it up on the Nadex platform, and I'll run through just the
I've got it on the USO, and the USO just spiked
and
up.
of course,
Okay,
the Den, a beautiful place when I need information. They got all the good information in there. Let's see. They're just talking NASDAQ right now. That's what they're talking. Of
Yes,
course they are. NASDAQ 100. So when I pulled this up, and as we talk, we're getting another rise. We're at 52.80 now, Basil. So 52.45, 52.48, it had climbed up to, Basil, right prior to the news, actually. It got a little bit of a boost prior to the 10:30 number for a couple bars. It was just prior to 52.50. Now, what was nice about that is that there were two spreads, and there was 52.50 was actually a pivot point that you could use. So you could buy a spread 52.50 up to 54, and then sell the spread
nice.
52.50 down to 51. So you're talking about a $1.50 spread away from that 52.50 point. And because it was trading within a couple pennies of where it was, one spread was going to be about $14, and one spread was going to be about $16, representing 14 and 16 cents. So bottom line is you could have put that trade on, and you would have needed about 30 to give or take 33 cents to cover, you could call it even your commissions, away from 52.50. So you would have needed about 52.20 to 52.80, either of those points. And so right now we're at 52.71, 52.72, and we'll see if we can dig into those actual news numbers of the oil.
And of course, I'm still way behind. I'm at 52.38.
That's
so
nice. We get to fast forward 15 minutes in the future for lessons, right?
Right, right.
It works out well. And I'm trying to dig into the news and see if those headlines are coming across. We'll see if the oil numbers. Either way, it doesn't seem to be moving it too dramatically. We're only talking about maybe a 30 cent move so far. We'll see where that shakes out. But no trade this morning.
Okay.
So tomorrow, of course, we have natural gas. We'll take a look at those in the same way. I'll be back with Tom, my bad. So what else have you been looking at this morning, Basil, in terms of...
So there are a couple of things that are going on. Remember we spoke about this rotational... There's a possibility of a rotational correction. And so I'm saying to myself, okay, rotational correction. That means that I've got to be eyeing the XLF very closely, which is the financials.
It's been a little rocket ship, yeah.
Right, they've had a spectacular move going from the November low in the low 20s to 24.91 here, having made a peak E in the Chapman Wave at 25.30 on the second, pulling back. And here again, I think that what we're looking at is probably a digestive phase. It doesn't mean to say that I'd be careful shorting something like the XLF, because high interest rates really does benefit the banks. So you've got to be careful there. But it was so fascinating because I was looking at certain stocks. Remember we spoke about NetEase?
Yes.
And even with this move, this rally attempt that's going on, the S&P's up 3, Dow's come back from being minus 20 or something, now it's minus 2. Look, NetEase and one of the leading stocks is just stuck. And that was my contention yesterday, that because of the huge moves that some of these absolutely fantastic, they're really phenomenal stocks. I mean, they are doing, this is NetEase's advertising, internet advertising. Each one of these, NVIDIA, you can go through each one, and they are trend breakers within their sector, and they've been leaders. And you can go through each one separately, and you find that although they've pulled back, like NVIDIA, I've been talking about it for a little while, has pulled back a little deeper than the others. Basically, the QQQ series is holding very well, because as it's about to take a dive, suddenly the SMHs are trading up. I have to admit that we are still short the SMHs. And we haven't been taken out in the upside, so our position is still there and active, but it's holding very, very well. I can't deny it. A nice bounce, and that's really what's going on. So it's very important to realize that so many fund managers, now you can start to document it, because you can see by the big blocks that go by.
Sure.
I'm sure that so many fund managers were just caught, not necessarily short, but on the wrong side of their thinking, because although they felt bullish, a lot took money off the table last year at the end of the year going into the election. And the move was so quick, I suspect that that's going to give us a really good base of support on any pullback. So I'm not sure about any double-digit pullback, but I'm pretty sure that we could have a 3%, maybe a 5% correction here. there's just too many people that would be buying dips. And as long as you've got those buyers, and that puts a lot of implication on, and of course Kevin's going to be talking about it today, and that's going to be terrific.
Yeah, I'll probably be listening, because the VIX, I mean, I'm always checking it right. I mean, it is.
And yes, the VIX said 11.19, down 26 cents. It just refuses to go into the teens, and my contention is people say, oh, maybe the VIX is not working anymore. Absolutely, it's working. What it's saying is under 13, there's buying pressure. And some of us keep trying to want to time it so that you can get a position that if there is a sudden spike to the downside in the market, the VIX will pop up. But you got to look at this and say, you know what, you break that recent low of 10.94, and it just says that there's still buying pressure. And I think that to me is contingent upon a lot of things, because I suspect that if rates really do go up quite a bit, if they break out, here's a chart I want you to show you. You see this chart here of my triple yield chart. This is the white is the 30-year TYX.
Okay.
Brown is the 10-year T-note yield and sign. We're almost about to break out. 31.97 on the 30-year, and today the high is so far 31.75. We were a quarter of a point away from breaking out to the upside.
Okay.
Yeah.
No, it is. It's interesting. We're almost at, historic lows on the VIX in terms of those lows that you're referencing are pretty much almost historic lows in the 10 range. And yeah, who's to say it's not working when we've just been going straight up for 3 months? And of course, there's not going to be fear in selling when the market's just going straight up. There's going to be buying.
And there's fear of being wrong. In other words, if you're short and the market goes up, that's really another issue.
Sure, that's not what money managers are paid for, right? Not to have money in the market. Exactly.
Right.
So quick check back at oil. We're trading 52.69, so only about 20 cents away from that pivot point. Be interesting where we shake out. Come on back, folks. Dow is down 10. S&Ps are positive. Nasdaq's up 20. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Basil, Chapman, Tommy O'Brien, checking in on that oil again. So it looks like we got a build of about 8.2 million barrels. They had mentioned our man Dave White in the den. But either way, it's just kind of oscillating right around that point. Back to 52.68. So we're up marginally, only talking about really 20 cents of movement since the news. We got a spike as high as about 52.85 was the high there, but back down about 20 cents. So we'll see where we shake out.
Okay, so I've got the chart right here. This is the delayed chart. Now, what you're talking about occurred 10, 15 minutes ago, and here we are, and that's what I was looking at. You see the down channel, what I drawn was from the high that was made, from the opening bar right there at 1640, that's 20 to 9 in the evening, I guess. On the 7th, there was a sharp spike down. So what I drew is a down channel. And that, let me just change that. And the down channel had the highs, the lower highs, and the much lower lows. And that gave me that area right here. In fact, early this morning, I was going to say, gee, I wonder if Tommy will talk about crude oil, because I'm getting some kind of a buy signal right here, because it went underneath the trend line and went back over it. So that's the reason why I said my bias would be to the upside, but I probably would like to play both sides. And I don't know if they would have made money, but look at this. Look, it went right to the trend line resistance, and now it's pulling back. Anyway,
I definitely like playing both sides of that, because, choosing the direction, of course, is a difficult task in any market, especially when you're talking about the direction ahead of news, because really that's, you're going to get a news number that you can't predict. At least we don't have the fundamental take or information to beat the market in terms of what type of information is going to be in such a substantial report like the EIA. They talk about all the different builds, the demand. But I just happen to, if you wanted to maybe look for a pop one way or another, I was even intrigued pulling it up, because for $15 of risk, right, at 52.50, your risk is limited to $15, and you're going to get $150 is the total pie. So you're talking about a max reward of $135, and in this case, you've gotten a slight pop. But with that, if you were able to play a directional play that you expect to pop in either direction, that's not a bad risk reward, defined risk trade.
That was going to be my question. If we had time for it, what would the either side give me enough gain to negate any diminution in the price of the opposite?
Are you looking for a large enough move, right?
Right.
And then it's the risk. But when you're talking about 15 cents of risk, which is really what you're talking about, the $15, you're paying it in premium, which is the tough part in terms of you're getting in it. Where the market's at 52.50, you're getting in at 52.65.
So you've already used up some.
Right, but then you have potential all the way up to $54. And it's amusing. I'm watching your chart right now, Basil, and I was about to say, oh, look, we're spiking higher. But back to reality, 52.73. So we'll see.
So now this is something that we've seen, at least I've watched you and Tom do this for months now, that most of the time there's a really big move when the announcement comes out. And that's the reason why I thought today my bias would have been to just play the upside. But I thought, I've seen the upside skyrocket or the downside and then come right back again.
Yeah, it is intriguing. That first few minutes, even the first 1 to 2 minutes, there's, of course, everybody like ourselves is trying to digest all that information in the scan of seconds. I'm sure they have computers digesting that information, looking for target keywords, whatever algorithms that the brilliant people out there on Wall Street can program, right? But yeah, it takes some time for the market to sort out actually where that commodity wants to head. And that's why those double-sided trades are nice sometimes. If you can ever get a quick move one way, and have 29 out of 30 minutes left until expiration on some of those binaries or spreads, you take one side off, and then maybe when you're only talking about 30 cents that you need to go one way, you jump up to 52.80, you take that trade off, and then if you get a pullback in the other direction, you still have equity and your costs are covered, which is a nice way to trade.
So I'm looking at the 10-minute nugget, and it had the same arch formation, which says rounding off this low can give you a nice little bounce, same as the crude oil. You've got to watch the high that was made at 10 o'clock at $7.70. And if it can break above that, it'll try to fill the gap. So as an entry point, I have to congratulate. Who called us from?
That was Tony. Tony from Wellesley.
Tony, of course, from Wellesley. I have to congratulate him for a very nice entry. And now all he has to do is manage the trade.
Yeah, and we've gotten a pullback. Definitely. I mean, you're talking about GDX and the miners are different than gold. But, man, you're right. They let it all the way up. They've been leaning it, on the way down. Gold's down $7, $8 today at about $12.08. And it's been a little bit of a pullback. So even, and like you said, Tony's trying to trade it both ways, where he's looking for maybe a short-term bounce, and then he's just a buyer for maybe the year in the GDX or something like that.
And I don't think that's a bad scenario at all.
No, I mean, I pulled up a longer-term chart. I mean, you take a longer-term chart of where gold was going way back, man. I mean, $1,500 in 2017 when it was trading at $1,900 for almost a complete year from 2011 to 2012. 1,500, somebody might call it a little bit of a reach, right? But not unplausible, not crazy by any means.
Actually, it's worth, if you want at some point in the next minute or two, we can look at the same scenario of the arch formation that's starting to hold quite well in the monthly chart of the gold continuous to show you that you could even make a case for a cup formation.
Ooh, this is going to be an interesting cup. Let's see it. I say, go ahead.
Isn't that interesting?
I think my dad would like where this cup is going to end on the right. Go ahead.
Should I send him a picture?
Yeah, I think we'll take a screen capture of this segment for sure.
And what's fascinating about it, because we had spoken about gold in this particular era where the Fed has made a determination. In fact, I was going to talk to Kevin about it, and maybe I can bring it up sometime.
Sure.
That the Fed has said they want inflation.
Right.
Of course, we know that once you let the genie out of the box, sometimes it's really difficult to get it back.
Careful what you ask for. Right? Careful what you ask for. Exactly.
You got to be. But at the same time, I've got a measured move. Actually, I wasn't going to talk about it, but I'll do this now. I've got a measured move in gold looking out. Let me do the space to the right. Let me just make it 50 so that I can go 50 months. Look at this. This is a move to the right that says that we could have a move from here going into the year 2019 or 2020.
2020, baby.
Really starts to break out, and that's the trend line.
So we're going to hit 2,000 in the year 2020? Is that what that chart's showing?
That's what the chart would say, but I always make a big deal about this H pattern. In other words, this H pattern really extends a little bit, and if you take out, if gold takes out the low December the 15th, that 1,062 level, and starts to close under there, that kind of in a way says the only way you're going to get this is if there's a real crisis instead of this really steady move. Because what it's saying right now is that there could be a steady increase in inflation, which is very interesting, because my thinking is there's a deflationary. If you look at Amazon, if you look at Airbnb, if you look at Uber, there's a deflationary phase going on that is telling us that all the countries of the world that have become capitalistic in mindset to improve their gross domestic product, to improve the wages of the poor, there's going to be competition for every watch, for every pen, for every whatever it is.
Yeah.
And that's deflationary. So it's very interesting.
And combined it with the marketplace just getting thrown in flux, right? People trying to figure out who's going to dominate what market and cutting out those middlemen to bring those prices down, for sure. Okay, folks, come on back. We got one more segment. Basil Chapman, Tommy O'Brien. We'll be back in 3 minutes. Join us.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And speaking of time flying, Basil, we have our workshop March 18th with my dad, and that is 10 days away, which is amazing. I picked it up during the break, counted it. We thought we'd give like a few weeks, and it feels like we just launched it a few weeks ago. And next Saturday, March 18th. So I encourage people, get your plans in order. Sign up for the workshop. You can bring a guest. You can bring whoever you'd like, of course. It's free. And my dad, Tom, he'll be doing 2 workshops. We kick everything off at 7:30. We'll be out there for an hour checking people in. Continental breakfast, 8:45. He kicks things off with a workshop from till 10 o'clock. And then 10:15 to 11:30. And then we'll take about an hour break. No, 45 minutes. Yeah, we'll have some question and answer, and then we'll do a big lunch on the rooftop for a couple hours, hang out, socialize, and kind of cap off.
I wish I could be there. That's fantastic.
Well, hopefully, like we were saying, we'll see how this one goes. We haven't made any plans at all, but hopefully that goes well, and hopefully we make it back up to maybe Boston at some point, because we love Boston, of course, and we'll maybe get up there for some spring weather, maybe check out a Red Sox game or something like that. Right. So just glancing back, because we've been covering it, oil trading back down to 52.57 as of right now, Basil. So you always talk about that first initial thrust, and yeah, man, what a thrust, right up to almost 52.87, and when we're back down 27 cents off that high. Yeah.
So in the Nadex, one would have been able to take out the profit from the upside and just hold on and see what happens until the
and
end
that's
of the day.
and so the way that my dad and I, the way I even especially really like to look at it is which way, you might have no market expectation, right? But sometimes you might say, like your case, maybe you were going to be bullish. Even if you were trading both sides, you said maybe I have more potential for a home run here. to the upside, but I still like the volatility with news coming in. So let's reverse that, right? Let's say, just theoretically, you're going into this trade and you say, my home run might come to the downside, but I like the trade both ways. That's where I like to look at things. Well, you get the pop to the upside, right? And you said, okay, right, I don't expect to make $1.50 for this to the upside. I was really looking for hopefully a bad number, that oil plummets, and that's my real opportunity. That's where I like to say, you know what, if you have an opportunity to take your entire trade off the table, you get that 30 cents rise. You could have done that in this case, and then as we get a thrust down, which is interesting, here we go. We're already down to 52.47. Now, this is where things would get exciting. You'd have 3 minutes left until expiration, but anything below 52.50 becomes just absolute profit. So that's a cool way to be able to trade these. If you know, you see a move one way, you want to play both ways, and anytime that you can cover your trade and lock off all the risk, and I'm talking about you're able to do that, which is nice, in the span of like 2 minutes from when you put it on, right?
And then go off and play golf.
And then you have 28 minutes of exposure, right, to the market. Go off, play golf, right? Go check out a spring training game. Exactly. So, Basil, what are we talking about in the Tiger Technicians Hour today, man?
So in the next hour, what I'm going to be going through is just, I'm going to be looking at, as I did some of it yesterday, I'm going to be looking at what could produce a spike to the upside to create new highs, and why I'm thinking that that's going to be very difficult to do, and that probably what we're looking at is, it doesn't have to be a sharp pullback, but at least until, I thought today at 2 p.m. the Fed was going to at least make some kind of an announcement. Even the next week is the week where the Fed minutes and all that is very important. But evidently today is nothing much. I thought it would be much, and I thought that after 2 o'clock we could get a pullback. My thinking is still that it's chop, 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 slowly moving to the downside, limited upside, and the only way I can see that, there has to be a new framework to break out to the upside. In other words, you've got to have some news that really is triggering a new bullish.
Well, we got a lot of news in the market. We'll see if we have a news to do that kind of action to the upside. Basil, thanks so much. Thanks for these past few days. I appreciate it, man. And have a great program. We'll be watching the Tiger Technicians Hour.
Thank you, Tommy. Have a great day.
Folks, thanks so much. My dad will be back tomorrow. This afternoon, we have a great lineup for fill-in host John Logan, Steve Rhodes. Come on back, folks. So the great day of programming. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.